Comex gold premium evaporates as U.S. Fed vows negative real rates to 2022, silver price twice as volatile. Gold and silver prices edged back from one-week highs in London trade Thursday, but kept half of last night's 1.7% and 3.4% spikes against a falling US dollar after the Federal Reserve gave a dire forecast for the world number one economy's recovery from the coronavirus pandemic and shutdowns. Now predicting GDP will fall 6.5% this year before rebounding only 5.0% in 2021. The Fed Policy Committee's latest forecasts see core inflation on the PCE measure slowing to 1.0% in 2020, before rising to 1.5% next year and then 1.7% in 2022. The Fed's key interest rate will in contrast stay at 0.1%, policymakers predict, locking in a real terms loss of value for cash savers. Spot gold prices for settlement in London spiked near $1,740 in late U.S. trade Wednesday, before edging back to $1,730 by lunchtime today, keeping the metal on track for its first weekly gain in 4. Comex August futures, now the CME exchange's most active contract for settlement in New York meantime retreated to $1,730 after spiking near $1,750 per ounce. That kept the premium for New York gold promises over London settlement around $4 per ounce, back to a fraction of the record $100 spike hit as the UK went into lockdown in March. To the outsider, says Alan Finn, director of global commodities at secure logistics specialists Malka Amit, March 2020's temporary closure of Swiss gold refiners, plus the collapse in air passenger flights out of London, led to an immediate conclusion that this would restrict the ability of secure logistics providers to facilitate the global movement of stocks. This assessment was naive and ill-informed. Swiss gold bullion exports to key Asian markets fell to almost non-existent levels in April, while there was a surge in flows to the West, with the US and Germany accounting for over 90% of gold exported that month, tweeted Refinitiv Metals. Thanks to record shipments into the U.S. during the global coronavirus pandemic and shutdowns, and despite the fact that less than 1% of Comex contracts typically end with bullion settlement rather than cash, gold stockpiles in Comex-approved depositories in and around New York yesterday reached a record 925 tons, more than 4 times the level of a year ago. 2/5 of that gold bullion is registered by its owners as available for settling Comex gold contracts, equal to more than 25% of current open interest in all Comex gold futures. That compares to a low of 0.3% as gold neared the end of its post-global financial crisis bear market in 2015. New York's premium to London for silver also fell back Thursday morning, dropping from 20 cents at last night's peak to slip below 10 cents per ounce after averaging a record 50 cents last week. In contrast to New York gold holdings, Comex warehouse stocks of silver remain unchanged for 2020 to date around 9,700 tons, having risen for a third year running in 2019 as still subdued retail US coin and small bar investment demand in the country perpetuated oversupply, according to the latest silver survey from specialist analysts Metals Focus, published by the Washington-based Silver Institute. The structural global market surplus that has been in place in recent years for silver continued in 2019, says that report, as supply exceeded demand by 973 tons, equal to 3.7% of last year's global silver mine output. April's anti-virus lockdowns in former number 1 gold mining nation South Africa, now down to 7th place, saw its output of the yellow metal plunge by 59.6% from the same month last year, new data show. The largest negative contribution to total mining output growth was made by the Platinum Group's metals, says a client note from bullion bank, ICBC Standard, which contracted 62.0% after contracting 35.1% year-on-year in March. Platinum prices failed to hold their post-Fed rebound in London trade Thursday, falling back to erase the week's prior 3.5% gains at $817 per ounce.